I understand the credit profile is something that we look at, but tell me a bit about, the self-employed cases that you get.
Yeah, so I mean, the first thing I think, Olen, is that, people in South Africa, it's fashionable to do some bank bashing. We see this often in the press, especially when there's some headline about a foreclosure case that the bank took a hiding in. And I don't think those are productive for the market, but that being put aside, one must be careful, I think, because I think consumers often have this experience that they say the banks are useless or whatever because they're not granting me a mortgage, and I factually, I can afford it and I'm creditworthy and whatever. But it's not that the mortgage lenders are leaving their lunch on the table. It's just that they're responding to the set of incentives that they're being given by the laws and the regulations and things that surround mortgages. And in order to break that mold, you need to get out of the mortgage, which we've done, right? And there are several examples, like the one that you've given. Say the self-employed person. The banks look at self-employed people from a certain perspective, which is counterintuitive unless you've taken the time to actually study the data. It's easier, say, if you and I start a business together, Olen, and you're the owner, and I work for you, then theoretically it's easier for me to get the mortgage than for you, the business owner. And people will tend to say, that's silly, it's counterintuitive, because surely the business owner is a better funding proposition. Unless you study the data. And then you see, let's say the business we started together, Olen, was, I'm working for you, and let's say it's a laundromat. At the start of COVID, we lost all our hotel clients and the laundromat was effectively shuttered. Now, you as the business owner, you have choices. With the available cash and savings and cash flow that may still exist, you now have the choice. You can either fund the business expenses and have the chance of recovering once the difficult time has passed, or you can cover your personal expenses, like your mortgage. Sane business owners paid the business expenses and left the personal expenses like the mortgage to be unpaid, because in a mortgage loan you have a very long runway and there's no social consequence for not paying, while the business expenses you immediately suffer. Exactly. While me as the employee, you were still paying me my salary, right? So I was still meeting my mortgage payments. And so on a statistical level, the self-employed client is a higher risk than the employed client. And that is why the banks are responding, or the mortgage lenders in general are responding to self-employed people in this way. However, many self-employed people are forced to rent, and a great many of them form, let's call it the cream on top of the rental market. They're really very good tenants who pay on time and whatever. And essentially what we're trying to do is we're trying to scoop that cream off the rental market and say, in this layer of cream, the good tenants, who of you are here because you want to rent and you stay there, that's fine. But those of you who are here because you're forced to rent, let's take you and we'll give you a home loan and make you a homeowner.